Let's talk about something. I know a lot of you are thinking, you see the headlines, right? The market's in a bull run, everything's going up, but then you peek at your own portfolio and it's just not matching up. So, what is the deal? Let's get into it. It's a feeling a lot of people have right now. It's like you can hear the music from a massive party down the street, but you can't seem to find the entrance. If you felt that way, you're not going crazy. You're definitely not alone. And as we're about to see, you're not imagining things at all. Okay, so check this out. This chart right here, this is why you're feeling that disconnect. On one side, since the April 8th market low, the Magnificent Seven are up 48%, far outpacing every index. I want to start with just one number, 32%. Now, what does that mean? Well, it's the staggering share of the entire S&P 500's market value that's now controlled by just 7 companies. Think about that for a second. Out of 500 companies, just 7 of them make up nearly a third of the whole pie. It's incredible. So who are these giants? You've probably heard the name that's being thrown around everywhere. The Magnificent Seven. It's the new nickname for a group of mega cap tech stocks. You know, the ones Apple, Microsoft, Nvidia, that whole crew who aren't just taking part in this rally. They're basically running the entire show. They now account for 32% of the S&P 500's market capitalization, 23% of its earnings, and 12% of its revenues. Valuations are rich, with price-to-earnings ratios near 30, but as long as recession odds remain low, investors seem happy to pay up. This is where that concentration really hits you. Remember that 32% number? Well, during this bull market alone, the Mag 7 slice of the S&P 500 has literally doubled, shooting up from 16% to 32%. So that means the other 493 companies, yeah, they're all left fighting for what's left of the pie. So when you have that kind of incredibly top-heavy dynamic now, we have to rewind the clock a little bit. And for our story, the key date is October 12th, 2022. That's the date this whole bull market officially got started. And man, has it been a wild ride ever since. When I say a wild ride, I'm not kidding. Just look at the NASDAQ 100, which is packed with these magnificent 7 stocks. It has soared an unbelievable 118%. I mean, that performance just completely leaves every other major US stock index in the dust. This huge difference in performance tells us that we're not just looking at one market. We're really living through a tale of 2 completely different markets. So let's pop the hood and see what's really going on. Honestly, the entire story of this bull market can be summed up with this one idea. It's not the thousands and thousands of companies out there that are soaring. Nope. It is a very, very exclusive club. We're talking about the Magnificent Seven, the Big Ten, whatever you want to call them. These massive household name companies are doing basically all of the heavy lifting. Now, to really get a grip on this, we need to understand a key concept called market breadth. It sounds technical, but it's super simple. It's just a way of asking how many stocks are actually going up. If tons of stocks are rising, we call that a broad market. But if only a few are climbing while everyone else is stuck, well, that's narrow. That is exactly what we have today. Incredibly narrow breadth. I love this analogy. Think of this whole rally as a giant heavy pyramid that's trying to balance on its tiny sharp point. All that weight is being held up by a super small base, which, makes some people a little nervous. So whenever we see a tech-led rally that's this concentrated, one big question always pops up. Are we just living through a repeat of the dot-com bubble from the year 2000? And while it might feel similar, the differences are actually what matter most. The differences between then and now are just massive. Back in 2000, so many of those high-flying tech companies had brilliant ideas, but zero profits, they were burning cash. Today, the giants leading the market are absolute cash-generating machines. And another thing, the Fed, back then, they were already cutting interest rates to fuel the economy. Today, rate cuts are still something we're just waiting for. This really gets to the heart of it. The fact that today's market leaders are so incredibly profitable means there's a much stronger foundation under them. It doesn't mean there's zero risk, of course, but it does suggest this isn't the same kind of wild speculative frenzy we saw back then. Okay, so if the giants are on solid ground, what about, everyone else? This whole situation has created a huge divide in the market. It's really become a story of the giants versus the underdogs. And you can see that performance gap clear as day right here. The large cap stocks in the S&P 500, absolutely stellar returns. Meanwhile, the smaller companies in the Russell 2000, their gains have been much, much flatter. The big guys have been winning, and it really hasn't even been a close fight. And this isn't a new story for the better part of a decade. Investors have been looking at these smaller companies, seeing that they look cheap and jumping in only to be disappointed over and over again. They've earned this reputation as a value trap. They look like a bargain, but they just never seem to pay off. But here is the potential silver lining in all this. Because these smaller companies have been left in the dust, their stock prices are now much cheaper relative to how much money they make. In simple terms, you get more earnings bang for your buck. And that is starting to look very, very attractive to some people. So this has got analysts keeping a close eye on what they call a rotation, where money could start flowing out of those expensive giants and into their cheaper little brothers, especially in key areas like tech, communications, industrials, and financials. And all of this leads us to the biggest question for the market right now. Are we on the verge of a great rotation that could finally let everyone else join the party? Let's just game this out for a second. Investors have made an absolute fortune on just a handful of these huge stocks. So what happens if they start to think, you know what, it's time to take some profits off the table? Where does all that money go next? Well, this is the classic playbook from market rotation. It's a simple three-step dance. Step 1, you take profits from the winners. Step 2, that money gets reinvested or rotated into the underdogs that have been ignored in step 3. If enough people do this, the rally suddenly broadens and a whole lot more stocks start to go up. This is exactly why it matters so much. A market where lots of different companies and sectors are participating is just seen as way healthier. It's much more sustainable. You're no longer a pyramid balancing on its point. You're a pyramid resting on a big, wide, stable base. So here's where we are. The market's heavyweights have carried this rally almost by themselves. They have proven their strength, no doubt about it. But the big question for the rest of this year is this. Are the underdogs finally ready to step into the ring and help carry some of that weight? Because what happens next could change the entire feel of this market.